Good morning, good afternoon, good evening, based on where you are. Welcome to yet another episode of the Equity Market Update with Irfan Khan and Joseph DiVirgilio. What
What
investors
investors must
must know.
know this week. How are you all? We're back. We're a bit late today because we had some technical issues, which we finally resolved. And I wanted to get to what happened this week with the stock market, with the economy. The
Nothing happened this week. What are you talking about?
Yeah, nothing happened, right? The Iran attack, the war, whatever Trump calls it, and the influence on the equity markets and the commodities markets, specifically oil. Stock of the week, and we're going to get to all that. But first, the statistic of the week. Irfan, which one is that?
My goodness, we always come up with the interesting stuff.
Yeah.
Volatility is normal. You should know that volatility is normal because market crashes of 20% or more occur on average roughly once every 7 years. History shows that even elite investors face extreme drawdowns. For instance, Berkshire Hathaway lost 45% of its value in the 20 months leading up to the dot-com peak. I mean, I'm sure many of you do not even remember that because we're talking about
I
what
do.
happened 26 plus years ago. It was at the turn of the century, turn of the millennium, but still, Joseph remembers.
Oh, yeah. Oh, thanks for reminding me that I'm that old. Okay, thank you.
No, you're just young with experience. You're
Yeah,
young with
well,
experience, my friend.
yeah, well, I remember that period very, very well. In fact, it was towards the end of 2000 when, Berkshire Hathaway had lost a lot of ground back then. I remember that quite clearly because it was the darling of all large caps. Warren Buffett and whatnot. But the question now is, since we had a 15-20% drawdown in April after the Liberation Day that the Trump announced back in April 2025, does that mean that we have another 7 years before we get another 20% drawdown or correction in the S&P 500? I don't know. I doubt it.
Markets have not been very satisfying, I could say, the last few weeks, have they?
Depends where you look. Last year, the S&P 500 closed up about 15% or so, but what outperformed were global equities ex-USA. So without the United States. So there was an outperformance in those stocks, and it seems like it's continuing right now. So if we look at the S&P 500, last week it closed down about 0.4%, with a 1.4% for the month minus, so negative 1.43% for the month, while global equities outside of the United States are up 5, 6, 7%. So there's been not only a rotation going on, and we talked about this before. There's not only we have a rotation out of tech stocks and more into materials and energy in the United States, but there's a lot of rotation outside of the United States as well. And like I mentioned to you, like Amundi, the largest investment manager in Europe. We also have, the Dutch pension fund has decided to get out of treasuries, for example, because obviously they deem U.S. To be bad credit for now, or at least unsustainable. That was their word. And so, energy materials have done better on the S&P 500 side. Nasdaq got slapped, got pounded in the chin with a minus 0.9 or just about 1% returns for the week. It was pretty bad for software again, as there's still this question regarding the sustainability of AI capital expenditures, so Capex. And like I said again, and we go back to the dot-com bubble. Back then, we had companies that were flying high just because their name included .com in it. Egghead.com. I remember this company quite
You've seen
clearly.
something similar here with AI stocks as well, have you?
No, what I'm seeing is very different because, so I remember I was saying egghead.com. It was this company had like 3 or 4 stores somewhere in the northwest of the United States. I don't remember now the details of it, but they went public as egghead.com. The stock went from like what, $1 to 40 or 50 in a matter of weeks. Then came crashing down, and the company went bankrupt. And so a lot of these companies saw the same fate. Here, and there was no government involvement, aside the fact that governments just decided to have a website and put, whitehouse.gov or Department of Defense.gov, and or outside of the United States and other countries governments started creating their websites, but that was the end of government involvement. Here, you have countries competing for leadership in AI. They're spending money. They're putting billions of dollars in this. So it's a different
that's a
situation.
significant difference compared to when
Very different. Very different. And there will be companies that are, they've been hyped up throughout this, AI boom. And then their faith may be, signed with a decline but it's a much different environment. So, and to me, we're still at the very beginning of everything. So whether there's this scare that Anthropic with their Claude AI software can rewrite certain software, like for example, you look at CRM, what's the name of the Salesforce.com? Salesforce. So Salesforce, for example, they're being threatened by this Anthropic Claude. So are some of these legal websites and some of the asset managers or broker dealers with taxes and whatever services they also offer. So there's a disruption. Disruption is going to come, but I think that this is too much of an early scare. That's all it is in my view.
Okay.
And the other thing is, February has never really been a great month for the market. So I'm in Tom Lee's camp. Tom is, which I know personally, is very, very, very bright. He's a fund chief strategist, and he thinks that March is going to bring a little bit of relief on the pressure on those stocks that were under pressure. So
does that mean that we're going to see less of a rotation happening?
It's possible. Let's see. I mean, it's possible. Let's see if he's right. I am kind of in the same camp. It's just overdone. I mean, there are companies like one of my favorite companies, Tempus AI. I mean, stock is down 50-something% from October. It makes no sense. Their earnings were just fine.
The fundamentals do not justify that
type of drawdown. No, absolutely not. Absolutely not. And on the economic front, we had some data that so an uptick in consumer spending, really slight, and the producer price index, the PPI, is the one that spooked investors a bit because it still shows a sticky inflationary environment. Now, this brings us back to a few things. One, Trump's polls are the lowest in history of any president.
How much are they at right now?
34% or something like that, 34%.
Okay.
And that's one because the mishandling of the Epstein files, the mishandling of the economy in general, immigration, but affordability and inflation is what really hurting Americans in their pockets, right? It's like the dinner table discussion.
I guess it's hard to argue with that one, right?
Of course. And so now you instead of taking, instead of just taking an off ramp, which was given to him by the Supreme Court by deeming his tariffs illegal, and just let it fade in the background, forget about it, and maybe these tariffs, you'll figure out how to pay everybody back. That's the other thing, the largest wealth transfer in history. American consumers pay more than 90% of the increase of the price of goods, and they're not going to get reimbursed. Who's going to get reimbursed? It's going to be the companies that actually have paid for the tariffs in the first place and got reimbursed by the consumer.
On that, even though the Supreme Court declared it, what was it, illegal?
Yeah, they didn't mention anything about the reimbursement.
Yeah, they overturned it. They didn't mention anything about the reimbursement. And
somebody's got to figure it out.
At the same time, I read something. I mean, there was an opinion where somebody said, even if the government were to change in the next few years, it would be hard for them to just blankly just say, you know what, we just delete all these tariffs. Because the thing is that what it has done is it has generated a new source of income for the U.S. government, right? So,
it has
that kind of thought.
It has, but it indirectly created the largest tax increase in American history, and so now
indirectly. So I guess people could say,
but it's still
in disguise.
It's a tax. It's a tax. It's still a tax, and that's what the Supreme Court argued. They didn't say anything about how to reimburse whomever. That's up to the government to figure out who they're going to reimburse and how. The problem is, it's always the poor people or the consumers are always going to be the ones screwed, because it is highly unlikely that consumers are going to get a check from the government saying, "Hey, we screwed you over," an average of $1,700 last year. It is more likely that the refunds are going to end up in the corporations that have actually made the transaction.
The average is $1,700 per family.
Something like that, yeah.
Wow.
Yeah, that's a lot. And so going back to what I was saying is, not only he didn't take the off-ramp and just quietly let it fade, try to figure out how to pay everybody back and just let it go. And no, he doubled down that same day. Okay, that's hurting Americans again. Then he goes out and does Benjamin Netanyahu's bid and goes into Iran, and now he started a war just yesterday, which obviously increased the price of oil. We'll see what happens tomorrow, but oil was already up 3% on Friday.
I better go and fill up my gas tank soon before.
Thank God. Yeah, exactly. But
markets open again.
Yeah, so Brent is going to spike up tomorrow when it opens. 1, 2, it's going to reflect on the price of gasoline of every American, adding to inflation. That's the sticky inflation.
You can hardly think that that's going to be a welcome news among all voters, whether they're Republican or Democrat.
Say that again, I'm sorry.
I mean, the news that gasoline prices are going to increase you can hardly argue that that's going to be welcome news for anybody in the U.S., whether they're Democrat or Republican.
Of course, no. But this is directly the fact that he doubled down on tariffs. Now he's going into war with Iran. That means an impact on oil, right? So that adds to the affordability issue in the United States for Americans. If the Iranian Revolutionary Guard decides to take control over the Strait of Hormuz, it's over. Oil can go so high, and it can squeeze the American consumer to the point where they're just going to leave their cars at home and walk.
I mean, we're talking about American consumers, but obviously this has a ripple effect on everybody around the world, including people in Europe and everywhere else.
Yeah, but in Europe, prices are more controlled by. They have policies in place that control the price of. Did I say gold? I mean oil. But in the United States, it's a free flow.
Like gold.
Yes, if gold has gone up. But in the United States, you see it much faster. So oil goes up today, in a day or two, you have the price increase. In Europe, it takes a lot longer. But no, it's almost immediate in U.S. So that's the problem. The problem is Americans are going to get screwed by tariffs again, and they're going to get screwed by oil again. And that's going to be inflationary, absolutely inflationary.
Yeah. I mean, now the ripple effects are something that we're going to have to pay close attention to.
Absolutely.
Do we want to say anything else with regards to what's happening with the new war front opened up in Iran, or shall we move
Well,
to
I'm
the
not
stock of the week?
I'm not a geopolitical strategist, and I really don't, but I am concerned that by looking at the response that Iran gave to the U.S. by attacking military bases in Bahrain, Qatar, and other places, this is becoming this is going to be a region-wide event. So I'm hoping that this doesn't escalate. I really hope that somebody puts some sense in. If there's no reason to, this is the other thing. The Trump administration in June bombed last year, 2025. They bombed Iran. We totally obliterated their nuclear capabilities. We obliterated it. And last
now
week,
he's talking about re-obliterating, right?
and last week is like, they're 1 week away from making a nuclear bomb. I'm like,
mind you, I've been hearing. I mean, it is not the time to discuss this in detail, but I remember hearing this message that they're days or weeks or months away from building an atomic bomb for the last
30 years.
years.
Yeah, that's Benjamin Netanyahu, that other freaking war criminal. He's been, he's been wanting to eliminate Iran and not have a two-state solution since he was a radical before he got into government. So somebody needs to get this guy. Obviously, he's a dictator, just like Trump wants to be. He's been buddies with Trump for years through Jared Kushner, whose father was friends with Benjamin Netanyahu for decades.
Well, his father is actually the ambassador to France now.
Yeah, he is. That's correct. And
I heard that there was this kind of a scandal, at least in France, because twice he was summoned by the Ministry of Defense or the French government, and twice he just refused.
Trying to undermine French politics or something like that. Yeah, something like that. Yeah, I read that. But nevertheless, he's a war criminal. So is Putin. These guys. It would be a much better world without these guys.
Let's move to the stock of the week, shall we? It's going to be something a bit easier to talk about.
Super microcomputer, ticker SMCI, Sierra Mike Charlie India, if you know the NATO alphabet. That's hyperscaler builder of AI databases, data centers. Love the company. Has gotten crushed in the last 6 months. If you compare them to other players such as Applied Digital, Hewlett Packard Enterprises, InnoData.
What price to earnings ratio are we talking here? With
Cheaper. We're around the 15, something like that. Really low for a tech
company. Sounds a pretty good bargain.
Absolutely.
Mind you, everyone,
yes.
It cannot be understated. If you've been following us for some time, you know that we always make it a point to mention this. This is not investment advice. This is just talking about something that
Joe's portfolio. Exactly. Always seek financial advice from your financial advisor. I'm talking about companies that I like, that are in my portfolio, which by no means means that you should follow on what I say. So SMCI, great company, cheap at these levels. It has created a nice base on a technical level, so it's slowly making its way back up. Like the company, they've executed. They had some problems a year and a half ago with some reporting some data. There was this scare about potential fraud, which wasn't true with the CFO. Something about CFO and reporting numbers, but all that's behind now. They did what they were supposed to do. They appointed a third-party auditing firm to relook at the numbers. Everything is fine. So that's in a rear view mirror already by almost a year now. So like the company, They're the leader in data center buildup and servers. They use mostly NVIDIA chips for their buildups, and I think the company has a bright future. It's one of the first players in the space, and they have a name recognition, which is difficult to overlook. So, good company. Financials are fine, and I love the fact
Didn't
that
SMCI go through a bit of a roller coaster recently?
Oh yeah. Of course, I did. SMCI has gone up and down like in the last 6 months.
I know it's not something we were thinking of discussing, but what about Micron technology? Isn't that also something?
Well, Micron builds microchips. It's different, but yeah, and they're also in the RAM business. But they're a different business and a different business model. But
okay.
SMCI uses NVIDIA, and I think now they introduced AMD chips for their servers. But they have this big partnership with NVIDIA. In fact, when there's bad news on NVIDIA, SMCI feels it too, because they're quasi-related that way.
I mean, a lot of them just so incredibly correlated, right? So it's hard to just pick them out in a single way and not analyze others which are correlated to them. Yeah. Okay. I guess we can wrap it up at this point.
Yes, Joseph? We can. We'll wrap it up, and we'll see each other again next Sunday. Have a great.
If the world does not implode in the meantime.
If the world doesn't implode in the meantime, that's correct. Have a great Sunday, and we'll see each other next week. Thanks again for following. Oh,
take care,
don't forget to share, comment, like, and subscribe to our channel, please. That would help us a lot. We thank you so much for doing that. Thank you again.
Take care.
Bye-bye.
Happy Sunday. Bye.